55% of Americans say they're invested in the stock market in some form or another. Most, according to the most recent Gallup survey. That could be a stock or a mutual fund, or perhaps you have a retirement savings account like a 401k or an IRA. Well, if you are in that crowd, you've probably noticed just how volatile financial markets have been so far in 2022. And that was before Vladimir Putin started getting restless. This morning, the head of a Burlington investment advisory firm offers some analysis on what's going on.
Low fees are one of, if not the.
Joining us this morning, Dan Cunningham, investment advisor and founder of the Burlington firm One Day in July. Dan, thanks for being with us on NBC5 In Depth.
Good to be here, Stuart.
Happy to have you. Well, you're becoming a famous face these days. I saw you on the Super Bowl last Sunday preaching the gospel of low fees, hold on to your money. So I thought of you around the theme of what's going on with these topsy-turvy financial markets, up 500 points or more one day, down the next. Is this just the new normal?
Well, we're back in the markets to where we were in September. So I wouldn't say it's that abnormal, but it has set some records. The first 2 weeks of January were the worst start to a year on record. But we've backed up a few months in the market.
Well, what are you hearing from your customers, whether they're in the working world, saving for their golden years, or maybe they're nearing retirement? How much anxiety do you sense?
I think it's relatively high, actually. It's around inflation. That's the issue that comes up most frequently. And it's something that we haven't seen in the US since the late 70s, early 80s. We haven't seen inflation at these levels.
So the Fed is very concerned about that and will try to rein in its easy money, raise interest rates or its benchmark rate that will, it seems to have an instant effect on the markets. And now, the markets are pricing in 3, 4, 5, 6 rate hikes over the course of the year. Does that mean that we have a year of this to look forward to, of this up and down, up and down?
Well, that would be normal. In some ways, the steady upward trend of the market over the past decade has been abnormal. We've had some big down periods in there. But I think we'll have to see where things come out. Originally, the Fed was saying this inflation is really transitory, it's really temporary. I don't think as many people believe that now. So that's going to really affect the number of rate hikes they do on 2022.
So, if you're a working Vermonter, in their 30s or 40s, what do you do when you see this upheaval? Do you do anything?
Well, I think you've got to focus on what you can control. If you worry too much about these macroeconomic events, the worry, the anxiety is just going to set in. Really focus on your own skills, your own saving, because, for example, skills are the value is going to increase over time. So if there's inflation, you're protecting yourself there.
And a dollar you invest today, after a dip, has more room to go up.
That's right. And the other thing to think about is, remember that in the stock market, or we generally buy the stock market through index funds, but businesses do have protection against inflation. Everybody says bonds are safe, and there are definitely reasons for bonds in a portfolio, but bonds in general are fixed contracts. So inflation is a risk to most types of bonds in a way that a business doesn't face, because a business can raise prices.
Let me ask you about the prospect of military conflict, if not a regional war. The degree to which what we're seeing between Russia and Ukraine could really hurt the financial markets here in the months ahead. We have precedent for this. What typically happens?
markets tend to go down because largely because of the uncertainty in a conflict or an impending conflict. I mean, remember, whether it's a war or a presidential election, markets and businesses don't like uncertainty. In this case, I mean, Ukraine is a big exporter of beets and sunflower seeds. I mean, it's not vital to the US economy. It's really the conflict with Putin that is on everyone's mind. I mean, unless you like beets, I don't want to be negative on beets, you know?
Well, right, but you know, a lot of people are talking about gasoline prices, and there was a report this week that showed, you know, a Russian invasion could mean 50 cents a gallon or more in the United States. On the other hand, on Wednesday, there was a report that retail sales were amazingly strong in January, much higher than analysts were predicting. So I just don't know what to make of all of this. Maybe it's time to turn off CNBC?
Well, you may have a little bit of energy disruption in that part of the world. People react to uncertainty and wars. They'll tend to do things like inventory gasoline, that type of thing. The retail sales number, part of that may have been inflation setting in as well. I mean, I think it might tell a little bit of a different story if you look at unit volume sold. So I agree. The numbers are depending almost by the day, they seem different, and that's what the market's trying to figure out, and that's why you see that volatility.
Thanks for coming by and helping us to understand. Dan Cunningham, founder of One Day in July. Appreciate you being with us.
No problem. Thank you, Stuart.